good while. So hopefully you guys all had a lovely, restful weekend and you are back in the saddle today. It's good to see everybody. I know for me, market was good to me this morning, so I'm just hanging out, relishing in my latest victory. So, what's up, Pete? Let me start the webinar here, get the recording going. Looks like we are live on YouTube now. Praise the Lord for that. Everything's going good this morning. Everything's working good. So, it's awesome. What's up? Let me know in the chat how you're doing. How you've been trading today? If you've had a good day, bad day. What are your thoughts on the gap down? Does it matter to you guys if you're just doing the wheel? Back to the normal schedule. Yes, sir. Dave is right on it. We're back to the normal schedule. And there's Jack Carter, back from vacation as well.
Yeah. Yeah. How you doing?
Pretty good, man. Pretty good. How about yourself? How was your time off? Did you enjoy it?
Yeah, I loved it. Went down to the Keys. I love it down in the Keys. I might have to get a place down there. I love
Yeah.
it. Keys. I might have to get a place down there. Yeah.
Some echo going on.
Yeah.
I think you
Really
fixed it though.
clearest water. It's just amazing.
Well, I've never been to the Keys. I've been to the Gulf of Mexico. So
Gulf of
or I
America.
guess Gulf of America now. Yes. When I went, it was the Gulf of Mexico, but now it's the Gulf of America. Got to make sure
Yeah.
you get it right.
Yeah. That's the great thing about the Keys. You could hit the Atlantic side or you could hit the Gulf side.
That's
Fit
awesome, man.
water super clear.
Oh,
And
yeah.
came home Friday, and my son and my new grandson and daughter-in-law came to Naples, so we had a good time. With,
Nice.
yeah, he's. I'm a little bit of trouble with my daughter-in-law. I made a comment. This little Roman, he weighs 20 pounds, so he's the perfect size for alligator bait, where you just tie him to a log and wait for him to start crying, and then you might get a couple gators. She didn't like
She didn't like that. Well,
that.
I heard a rumor in Florida. You just go find any body of water, and there'll be an alligator in it.
Yep, there will be.
So
It's
you know,
many of them.
yeah.
So I
Well,
went down, Patty. I went down to Marathon and Isla Morada, down through there. I like that place. I don't really like Key West too much, but the rest of the Keys is amazing.
we got Jeffrey with us now. He's already
Yeah.
pulling up the disclaimer. He's ready.
I don't know about ready. I'm here.
Yeah.
Dun, dun, dun.
I highly recommend the Keys. It's not even like part of the United States. It just seems so crazy.
Keys? I got tons of keys.
Yeah, you ever been down in them?
I got all these keys for all these things. Huh?
Yeah,
One for a bulldozer, the other for a Tesla.
yeah.
I got a backhoe key, a tractor
Oh,
key.
okay. The barn key.
Did you pick up the bulldozer?
No, I haven't messed with that yet. Like that's a bigger project. We gotta go recon it before we can go pick it up. So
Yeah.
it's a plus this time of year there's a 900 bajillion things happening all of a sudden.
Right.
Anyway, all trading involves a substantial risk of loss. Past performance not necessarily indicative of future results. If you trade, you might lose money. That's what that means. This presentation is intended to be informational, educational, fun, entertaining. Not a recommendation to be buying or selling any financial instrument, including stocks, options, bonds, forex, futures, cryptos, treasuries, betting markets. 90% of traders lose money. It's probably you too. If you desire personal financial advice, there's people for that. Not Jack and I, but you probably just do better if you learn it on your own. So, jumping in. Did you do any trading last week, Jack, or just
No,
forget it all and walk away?
got it all and walked away and shocked when I come back and take a look at it. I didn't even have the laptop. I just we were on a boat and I just had the phone and I didn't even have that with me or didn't even have it turned on.
We set a record, man. A record.
What happened?
We hit 13 up days on NASDAQ. We've not done that before.
13 in a row, higher highs and higher lows,
Yep.
or at least
13 in a row.
that's a really strange sign. Abnormal, very abnormal.
And it's you know, I tell you, dangerous.
Take a look at QQQ. You saying that was up?
Yeah, look at that. Look at that run. Right up into the target. Look at that. Here was the high. My high, my system, my pattern. Here was the high. Here was the low. Boom, shakalaka, right into the target.
From where do we go from here?
Well, there's 5% chance we rally on up here. There is a 95% chance we do this.
Back to the 606?
Yeah, we could come all the way back down and possibly even 598 area. Would be pretty wild.
I'm not going to short this, but that's an abnormal run.
Yeah, that doesn't happen. It's not normal. It's even over here off of Liberation Day, we didn't do quite like that.
Mm-hmm. I didn't catch any news. Are we still at war?
Yeah, in fact, Iran was shooting up everybody over the weekend that was coming through.
Nice.
And so Trump, I guess our Navy shot a hole through all the way through one of their boats.
Cool. I like hearing that.
And
Boots on the ground though, huh?
So war is ultimately bullish for the markets. If this goes on, longer than the initial reaction is usually like, oh my gosh, I'll burn it all down. But then it's just a money making opportunity for a lot of companies the longer we stay at this. So it tends to be bullish, quite honestly. A lot of people don't, it psychologically doesn't make sense to people, but just go pull up any war in the chart. Most of them end up being bullish for the market. It, doesn't have to make sense, but it's just kind of the way it is. So anyway, I was trying to get this income harvester report to pop out here for us.
Got called out of 900 shares of NVIDIA on Friday.
900. Whew.
At 190. So sticking some puts in there today.
See NVIDIA. It's funny, I have all my bots are on my phone, so I gotta talk to them. Yeah, 190 was down here just a little bit, but that's ripe for another pullback too. So if you go off of this high and you go down to this low, look where it tagged. Tag that same purple line. And now we pull back.
How far back? 186?
Yeah, it'd be right around 180, 186 at the minimum, but it there's possibility to come all the way back down and retest these highs that we didn't test back down at 150 area.
Dang. All right. Well, I'm in for a good ride. I got the 192.50s I sold for this Friday's expiration.
Yeah. See, if you just look back to this pattern right here, this started over here. Every time we dip anywhere down in this zone, in the, from 180 down to 170 area, anytime we dip in that zone, that would be the perfect place to either sell puts or buy some shares. And then anytime we're getting to the top of this range, you'd be like, well, we're out of the top of it. But anytime we're in the top of the range up here at 190 or above, it's a good time to get out. And that's worked for the last, I mean, this started back here in July. So July, August, September, October, November, December, January, February, March, April. That's 10 months. It's worked so far. I hadn't
10,
broken yet.
10 months ago and nowhere also.
It's 10 months. That's what I'm saying. Like, that's the stock is basically going nowhere in 10 months. And it's still likely to chop around more.
What's the
So
beta there now? Is it still
I was,
2.5?
yeah,
Oh,
1.7. It's chilled out. It's chilled out a little bit.
yep. I
Let's see.
sold I sold some AVGO. This morning I was pretty on it. It was a good morning. I was ready to get back after it after a week off. That's the longest I've taken off since last August.
Yeah. I I haven't taken any off since I became a guru.
You got you got to
That's
take
like
it off. It's not healthy.
that's like 5 years now.
I'm gonna
So,
make you take a week off. I'm just gonna have publisher Nate give you a week off. You're not get online.
yeah, the problem is like I do a YouTube show and stuff, and YouTube will punish me for like 3 months if I skip a skip a
Too
day.
bad. Too bad. You're gonna get punished. You're skipping days.
Yeah. Well, that affects the money I make off of that. Let's see. Beta.
Your health. It's for your own good. It's for your long-term mental health.
Let's see. I need technicals. Let's see. Descriptive performance. Let's try to use this FinViz scanner. I don't have a account with it or anything like that. But we like these betas over, usually we like them over 2, but over 1.5. Let's see. And oh, this thing's being doggity dog slow here. Let's see. Any exchange, market cap. Let's go with anything over.
Yeah, Tim, I
I'd probably
could
rather
work
be
with JT in his
over 2
time.
billion. And so now we're down to 327 tickers, I guess. Let's go with volume. Let's see. Price, we want definitely over 20. Let's go over 30. And there we go. Down to 221. Let's see. Let's get some betas even higher. I like it to be real juicy. Let's go with beta over 2. Now we're down to 69 tickers. This is starting to be more realistic here.
And you got price over 20.
Price over 30 is what I did.
But
And
low
let's go back
400.
to I was gonna go back and I didn't put any volume in here, but let's say average volume over 1 million. Good juicy stuff. 56 tickers now that we're down to.
I still like AA, but this is a really good way to do it. Have you thrown
This is not looking at options volume or anything like that.
they all have weeklies?
Let's see. I don't usually use FinViz, and this has changed around a little bit since last time I was in here. So let me see. Let's see. Current volume, outstanding shares, trade float, IPO. Let's see. Maybe it's under the technicals where the come on back over here. Performance. Change gap open. Nope. Let's see.
It looks like ASTS took a hit.
Do we have any? All right, let's go back to technicals. Let's see. We want to be over price above SMA 20.
That's
Now we're down to 55.
that's a good filter.
So these are in an uptrend at least for the last 20 days. And now you got 56 tickers here, 55 tickers. This is a good place to start, everybody.
Great place. Now remember too, you don't need that many positions, right?
And
7 positions max, right?
yeah, you just need a couple out of here, really. But I'm just trying to help people figure out how to get started with this. A lot of people, they're like, gosh, if I don't come to one of these shows, I just don't even know where to start. I mean, I hear this from people. They're like, how do you find these tickers? And there's all sorts of free scanners. All I did was come in here and look for companies that are more than $2 billion in market cap. So it's a bigger company. Price is over 30. Volume's over 1 million a day. Then the technicals, the beta over 2. This is where you get paid. And then uptrend. Jack loves the uptrend. Price above the 20 SMA. It could just be as simple as that. You're like, well, it's not like your roadmap line. It's not this. You're not that. Almost all of these that are above the 20 SMA are going to be probably above the roadmap line.
Yeah, this is as simple as it gets, and this FinViz is free, I think.
Yeah, I'm not logged in. I didn't do anything. All I did was pop on here and just start clicking buttons and filling some stuff out. And
Great way to do it. Now, why would you want this, folks? You want the volume over 1 million because you want to be able to get in and out with liquidity, and you don't want a wide spread between the bid and the ask. And when you have at least 1 million, you have liquidity. You have liquid options as well. When you have a price, you could filter it out based upon what's been working. For me, the lower price stuff has not been working.
yeah, and that's more opportunity to get chopped up too, because low price stuff's unreliable sometimes. You don't have that big money playing in there.
Exactly right. Exactly right. And this just gives you a great way to start. And remember, all you need is a couple. One is really all you need to get started, and you can use that for years.
Yeah, and this is dominated by technology because the rally in the last 3 weeks has been dominated by technology. So that's why you've got what you've got on here.
Speaking of technology,
Upgrade now.
how about Hood? That made a big jump while I was out.
Yeah, so you know what happened
Oh,
is the SEC approved removing the pattern day trader rule.
oh wow.
You
When
know,
does that take effect?
you know who that will probably take effect around Memorial Day, maybe beginning of June. So you know who the number one lobbyer for that was?
Mm-mm.
Robinhood. They spent millions of dollars lobbying in Washington D.C. to get this rule removed. They were the number one player in getting that rule removed because something like 75% of their accounts are under the PDT threshold. And they
Wow.
want to free up all that money to be lost
Let's let's
to the markets.
the chart on Hood.
So, food.
I sold the 82 puts on Hood today. I
But
sold 15 of them for 48 straight out of the PXO.
that was the why. But when you actually look at it, Jack and I have been talking about this thing launching off for. I started selling puts back here in February. So March, April, May, March, April, 2 months, 3 months. I guess I've been in it February, all of February, March, and now April. I've been selling puts. And when we break through here, the next resistance is here. And when we break through that, the next resistance is 175.
Dang, dude.
And then above that, we're going to 300 more than likely.
Wee. All right, I'm going to load up on some more Hood.
That's if you missed it down here in the 60s, if you thought I was full of crap, it's okay.
I don't think you are. I've been doing this the whole time, and you warned me not to. And this is a good case lesson on a lot of different levels. Number one, before we got into that first down arrow, I was on this thing like stink on a monkey, thinking it was just going to keep going. And you told me it might have even been back. Me, I know you told me right there.
We started right here in the summer. When we were doing this consolidation, I was like, it may pop a little bit, but we have this giant opportunity to come back down in here.
Yeah.
And you're like, I'm okay with that. I'm okay with that. Because we were sitting at 115 right in here.
I'm okay
And
with I'm okay with all of it, because in the back of my mind, I just think of your Red Hat story, and I think Hood's way better of a company than Red Hat. So it's almost like, and I use this loosely, is like it's hard to lose.
yeah,
If you this company's not going to go out of business, so I was okay with it, even though I was wrong about the direction. I was still able to make a ton of money on this thing. I think you and I both sold some 68 puts one time.
I've been on 69s, I've been on 74s.
All over the
Last week I
just
moved up to 70, 80 something and actually closed them out already for 12 cents.
I sold the 82s today. This has just been a big money maker, even though it has not gone higher. That's the thing. Since the top back there, I still been doing it, and now I'm just as good as ever. And wish I had more back there at 68. A
I did
lot of
one
talk
I did
about
one on Thursday while you weren't here
on Hood.
on SoFi. Look how similar that chart looks. I did one at a 19 strike on Thursday for next Friday.
This
No,
is a
1750, excuse me. 1750 is what I did right here.
good small
1750.
account stock. SoFi under
Yeah,
2 grand. It's a good play.
we pulled up. I did at least 10 trades for everybody on Friday that were attainable or doable for different size accounts and just went through them. I actually placed the SoFi play right there for this Friday, up $7 whole dollars out of the $15 potential, but only using 1,750 cash right there, capital requirement.
Good pick for people with a small account, or even if you have a 10 grand account, you want to spread it out. That's a good one.
Now, people ask, why would you do this? Why would you want to generate income? And Jack, this is what you and I both do: is generate consistent income, and this is what your account could potentially look like if you just consistently book some profit every day. And this is, I was at 30. This account, the account value, 35,980 beginning of the year. Look at that number now. It's more than doubled. More than doubled. And we're only in April.
Yeah, well, you're going to have a great year. This is what a system does for you. The stock market, looks nothing like that. If you put like DIA or SPY up against that chart, looks nothing like that. And that's the result of a system that works and working the system.
It's like, look at SPY this year. It while it did go up, it had this giant dip, but my account didn't have a giant dip. Like there's
Oh,
nothing in there. Now, I did have a giant dip in the 50K challenge account. For those that have been here before, and you're like, well, what about your other account you show off all the time? I did something stupid and took a hit. But if we look at the month, just the last month, I'm about to not drop that stupid off, and it's just been consistently coming back up ever since. And across all the accounts I trade, I've already made half the money back that I lost right there.
way to go.
So it'll be a few more days before I make that completely back. I've had, I think it's 16 trading days since I lost that chunk of money. And I've already made half back in 16 days. So give me another, before 2 whole trading months is up, I will have made it back probably.
Yeah, you handled that really good. I just want to tell you, you really handled that good. A lot of people would have started hitting the bottle or quit drinking or just you get so much self-loathing over a 50 grand hit in one day at the end of the day. What that happened all in what, an hour and a half?
It
Yeah.
happened in like the last 30 minutes of the day, pretty much.
On a Friday, so you got the whole weekend to beat yourself up emotionally but you didn't do any of that. I think you handled it great, and that also allowed you to come back and you didn't revenge trade. You just, again, stuck with the system, and another great case study of how to be a successful trader.
Yeah. I mean, as if you stick your head in the sand, that's kind of like the on these income harvester trades we do. If you jumped into something like, you're talking about Nvidia, and if you got put at 192.50, and this thing all of a sudden dropped all the way down here, and you decided to close it out, you just booked a giant loss and gave yourself no opportunity for this thing to come back up again. If you panicked and sold and you're like, no way, I can't, I'll buy back in when it's down here, and then it bounces right up here, right where you sold it, because that's what the market does. You did it wrong. And that's been a big thing. Jack, we've talked about that on the show a lot. If you're new here, let us know in the chat that you're new here. But that's it's one of those things that if you're going to do income trades, you got to stick to it. One little bad trade does not make a whole new trend in the market. One good update does not make a new trend in the market. One blip doesn't make a new trend. If you have a proven track record of consistently generating profits, you just got to keep doing that. One bad decision, you don't let one bad decision blow it out. We talked about, while you were gone, Jack, last week, I talked about the statistics of trading, and you size everything so that your max risk keeps you in the game. And it's important. It's important. And if you don't know how to do that, we've got the replay from last week, but you should learn it all before you go betting 10% of your account on any trade. Anything more than 10% on a trade can be extremely detrimental. And right there, 10% on a trade. It only takes 7 trades to blow 50% of your account. And then you got to have 100% gain in your account to get back to where you started. You ever thought about that? Anybody? Anybody ever thought about that? You lose half your money. It takes 100% performance to get back to where you were. Jack and I, we're sitting here only targeting 40% ROI a year. Now, after a couple of years, that compounds to over 100%, but in a given year, you may not be able to recover.
Yeah, that 2% is pretty much right on the money.
And this is where, in any discretionary trade, I'm usually here or less.
Oh, on a directional trade, if I ever bought straight up call options, I'm not even near 1%.
Yeah. Because you want to be able to get it wrong and it not do any major damage to your account, right?
Exactly. And most of the time when you're buying a call, you're going to get it wrong. Anytime directional trades are rough.
So if you watch Jack and I, we usually size down. Jack gives me a hard time sometimes when I'm only doing one contract of one of these short trades, but that's the risk I can afford on something like that. Yeah, we occasionally do some directional trades here on the channel or on this, show, and usually it's a very small risk type of proposition because just not sure. The statistics say that somewhere around 90% of directional option traders are going to lose money, end up in the negative.
All the money, not some money, all the money.
You're gonna lose the money. So most of the time we're flipping this around and we're the ones selling the options because that says 90% of the time you're gonna make the money.
And that right there is the biggest advantage the stock market has to offer by far. Nothing even comes close. So what that really means, since options are a zero-sum game, is if 90% of the time option buyers lose 100% of their money, and it's a zero-sum game, then it means you have a built-in advantage, 90% built-in advantage when you're an option seller. You don't have that kind of advantage with any other trade in the market, not even close. So if you don't like losing, think about being an option seller.
It's just, a lot of people don't come at it thinking about the win, like how are they going to win? How are you going to win? How often are you going to win? Now, I play a lot of spread trades, and most people will come in. I need to jump to a clean chart here. Let's just pull up an option chain. Most people would come in and play right in here, right in close to the money with their spread trade.
Especially on an ETF or an index, and that's dangerous.
Come in right on QQQ and be like, I'm gonna bank up. By playing right up against the money, you're basically playing a directional trade.
Yeah.
And when you look at, most people look at this number and they're like $30. I'm gonna make $30 for that trade. They don't look at the potential loss, which if you look at it, the potential loss here is 70. So that's actually you're risking 2 to potentially make 1 on this kind of trade, and it's directional. Like, you need it to stay up. And if you actually went even closer to the money, straddled the money, now you potentially make 50. Now it's a 1-to-1. You risk 1 to make 1, and the potential profit is only 49% right here.
That's not good enough for me.
The market's already saying it's a coin flip. You're just sitting here flipping a coin, 50%.
You have no advantage here.
So there's no statistical advantage, even though you're selling credit. You're being a seller, but you have no statistical advantage. And, Jack, I know this is a day early for AVGO, but if you were looking at this one out for Friday, usually you would be somewhere down here if you're trading bullish, and you'd be hunting for a few bucks, 10% usually return on your money. And then you go, 250 strike, that's $250 per contract. And then Jack's going to be looking for roughly 10%, somewhere right around 25 cents, 20, 25 cents right there.
Look how far out of the money I would be. I like this trade.
Now look at this right now today, even though it's early, 90% chance you're going to make money. Right here.
I like that.
Instead of playing up here closer to the money, where it's more of a 50-50. I think a lot of people have trouble with this, that they just follow somebody saying, hey, you should sell a credit spread. It's going for big money, and then as soon as they say that, they convert the trade into a directional type trade. And then
they've placed it within the normal trading range of the stock. That's the other problem. They're way too close, right? So the stock can fluctuate easily within the prices they picked. Whereas if you use a 370, that's out of the range of the stock's normal trading range.
See, the market maker is already telling us that they're expecting this thing by going and selling the at the money call and the at the money put. You're like, well, you're slightly out of the money. Well, if there's no perfect at the money, but it's like $16 here. It's 15, almost $16 here. It's basically a 15 to 6, 15.80 to $16 move is what the market's pricing in right here. And so if you're playing anywhere closer than $16, then you're in the normal priced in move.
And that's the danger zone.
It's absolutely a danger zone. So by staying down here around 370, you now have 90% potential profit. And then, Jack, you like to do a little bit of technical analysis on the chart and check and see if it's above your trend points, which right now, the green's back, they're all in the right order.
QQQ first, I'd have to check. That's what I'm going to check tomorrow.
And then QQQ, all three are back.
Ooh, we got a crossover. So this means a crossover like that. It means we could see a big pullback, but it's still going to be bearish because that run right there in Q is not sustainable.
So
I like it. That's a good one.
So I'm not trying to say that anybody should do the AVGO. I'm saying that you should look at the statistics of the trade. How many people look at what's the probability that you make money on a trade before before you get in? Let's just do a poll really quickly. Let's give everybody 5 minutes to do this. Here you go. This is always. This is not like sometimes I do, sometimes I don't. This is always.
Yeah, for me too.
So
There's
make sure.
a lot of free calculators online that will tell you options calculators are free all over the place. They'll tell you the uh, probability of profit.
Now, just because your platform will always calculate it doesn't mean you always look at it. This question is very. Do you always look at the probability before you enter the trade? And that's be honest. It's not like Jack and I won't be able to. It's an anonymous poll, but be honest with yourself. Like, do you always do it? If you don't, then quite honestly, you're not treating this seriously enough. There's a substantial risk of loss in all trading. And we'll let that roll for about 4 more minutes, and then we'll see what everybody has to say. You have anything to add there, Jack?
No, I think that's good. I think that's really great.
Yeah, and in case you missed the show last week, which Jack, I know you were out on a boat, but I went through the statistics of trading, and we have a replay page for this show, and I'll throw that into the
Tremendous
chat.
value you give them. Tremendous value you give them.
Right there. I didn't sell a darn thing in that presentation either. All I did was go through the statistics of trading and why you should target higher probability trades, but that it doesn't just end there. It's actually about the expectancy of a trade. You can take high probability trades that don't pay you anything. I could take lots of trades that guarantee me to win, but I'd only make $1. And if I lost, I'd probably lose, thousands of dollars. And over the long haul, that trade may not work out in my favor. The little trade that I do every day that, on NASDAQ, in fact, I have one of those on already that I did a little aggressive this morning. I've been running a statistics model and trying to figure out if it works. Right here, I'm already up $500 on 10 contracts. That's $50,000 I have up on that trade right there. Now, doing this, I've made $39,000 this year so far. I have the potential to make $900 if this works out in my favor. This is not all my account. It's not all my anything. Just took a little shot at it this morning based on the statistics. Now, it has a 99.5% chance of ending the day with full profit.
And there's not a higher calculation. The software doesn't even do anything over 99.5. So that's as good as is what I'm saying.
So it's likely that I keep all this money. Why didn't I put the whole account in? Because it was not according to my rules. So got to be careful. I don't, risk of ruin. If you put your whole entire account into something, you better be darn sure about it. Otherwise, you could be out of the game tomorrow.
Yeah, I've rarely done. The only time I can really think that I pushed literally all my chips in was on my NVIDIA trade. Way outside of my parameters, way out of balance, way too much for one trade. But it was a directional trade, and I had supreme confidence in it, so I went with it.
Supreme confidence.
But most of the time, I haven't had any confidence like that on any move. Biggest trade I ever did, too, by the way.
Let's see. If I can get this income harvester report up. Finally.
I see a comment about ASTS. What was it? The week before last, I got out of the whole thing. Um, I I think they're going to get killed by SpaceX. So I stopped doing naked puts on it. I had 300 shares. I sold them all, 90 something, and I'm out.
And that was it did not trigger my long
Yeah,
right
out.
there. And look at what happens.
Not to say it won't work. I read a really cool thing I want to share with everybody tomorrow. I think, Jeffrey, you saw that about the Morgan Stanley Space 60, and ASTS was one of those stocks. So it might play a role. But for me, I don't want to go up, I don't want to own anything that SpaceX can just blow it out with a press release, right?
So I finally saw when the plan is for the SpaceX IPO. It's June 15th
Mm.
is the current plan IPO day.
NASDAQ listing?
Well, like all that's in the air right now. They haven't done the official filing with the SEC yet, but this was the timeline. I think one of the underwriters put it out that they plan to have the underwriting and all the, documents, T's crossed, I's dotted, Q's circled, and have these documents to the SEC by in front of Memorial Day with an IPO target of June 15th.
The CBOE is going to make an absolute shit ton of money. I'm just saying right now. I'm long CBOE for everybody. Should know, make no joke about it. I think it's a powerhouse stock, and they're going to make a fortune. Just, I think Nate had a stat on how many calls were bought relative to puts when Nvidia split, and it was just unbelievable. The put call ratio was so out of whack, it was ridiculous to the call side. And I just think when this comes public, the call buying is going to control the price of the stock. I think SpaceX totally is going to have those calls uh, bearing a huge bearing on the price of the stock.
What's funny though is, there's our poll. So 50% of people here do look at statistics every time. 50% don't. And that's out of 46 people that answered out of the 150 people watching. And so this is your wake up call, everybody. 50% of you don't even look at the statistics every time you trade. What are you doing? Seriously, what are you doing?
They might not have known to, They might not have known about that. We got to cut them a lot of slack here. We can't spank them too hard. They might not have known that they could even check the possibility of probability of profitability before they did a trade. So there you go.
But then why did you get involved in trading if you didn't do your homework and learn that there's statistics to this stuff? But
Wanted to make money.
if you got into it naively and you just thought, you throw some money in the market and make some money, welcome to the wake up call.
Yeah. Look before you leap.
Yeah, definitely. Always use tools to find out the probability of your trade. Stock is 50-50. Every stock, 50-50. You didn't know that. So
You're an idiot. Everybody's just learning.
Everybody starts where you start, but you shouldn't throw money in the market until you learn the statistics of trading and how to find high probability trades.
What was
that? That was Blake pinning the document I just shared.
Yeah, that was me.
I'm playing around with the sounds, and I wondered if I got filled.
Yeah, it was like, ding dong. Somebody's at the doorbell. Blake, let him in.
This way I could be outside smoking a cigar, and if I hear the alarm go off on the laptop, I can just set it down and come in and see what happened.
So here's some of the ideas. I really got after the bot. It was doing the same trades every day. So I got after it, and it pulled up some new stuff. Maybe it's good, maybe it's not good. Maybe the prices are real, maybe it just completely fabricated this stuff. So be careful. These are just ideas. They're not necessarily trades to do. So first off, we have XRPT. Then we have USGG, USAX, PSIL, ASTS, PLTR, NKTR, NVDA, AAPL, AMD, BLD, GOOG or GOOGL. I like to play the Class A shares. Jack, I know you like to play the Class C shares.
What's the Class C? The Goog?
Yeah, Goog
Yeah.
without the L.
Did the Goog without the L today. 4 of them at the 327.50 price strike for Friday's expiration. I got $1.57 for 4 of those.
Now I like the one with the L, the Class A shares. It's funny enough that the Class A shares and the Class C shares don't perfectly match 1-to-1. The Class A shares tend to do my patterns more reliably than the Class C shares. So I typically will trade the GOOGL, not the GOOG. It's just a weird anomaly. And this was produced by an OpenClaw bot. So there may be mistakes, there may be bad picks, but several of the stuff we've already talked about today. So there you go, everybody. There's some ideas.
Good ones. All right, I got a couple for you to look at.
Yeah.
I don't know if today or tomorrow we have time to go over that Space 60. But
And Rocket Lab triggering my pattern and it's going on up.
I sold the 78 puts this morning. I sold 20 of them for 50 cents.
You're probably not going to get those. Probably going to 108.
78 puts? Think I'm getting them?
I said probably not. We're probably going straight to 108.
Yeah, I think so. So inside that Space 60, there was APD. Let's see what you think of this one.
It's a little rich. Whew. From my account. We're hitting our head right. We're hitting our head right on this resistance right here.
Hitting its head.
We've got this high. We've got this low. I'm going to turn off your trim points for a minute.
Didn't do it.
And we're stuck right in this resistance that we sat in for last summer.
Mm-hmm.
Now, while the market, this is one of those things too. So while the market was ripping to all-time highs, this was making a new low.
I don't like that. I'm against all that. It's got to be moving in lockstep.
So now we're coming up off the bottom and the market's back up here and we're just farting around right here. So something's up with this, the Air products. So this is going to be, they're going to be supplying fuel for all these rockets.
Yeah.
I think it's what the idea here is.
Yep.
But obviously they're not turning that into big profits. They've been stuck in this range for
Long time.
This is not just, a this year problem or a last year problem.
6 year.
This spans all the way back to there in COVID times. So
Yeah.
obviously they're having trouble turning this space boom into profits on the bottom line.
So far they are.
And it may just be bad management.
That's what I'm thinking too. But there's probably a lot of upside if they could figure this thing out. And the yield is not bad. And it came out with a really high dividend score in terms of ability to pay, no cut and raise. So the dividend score is good. The yield's higher than little average, but I don't know if I want to get capital appreciation out of it too if it's in the Space 60. I passed on it. Wanted to get your opinion on that one. And
the company's probably solid, but I just don't care for the chart.
yeah, me neither. That's a great way to put it. The company is solid, but I don't care for it either. Now, one I really liked, and I did this, was HXL.
HXL. This is not one that I know off the top of my head.
Mm-mm.
Let's see. Let's take a look at the big picture. So we did a breakout from the 80s. It's been around a long time. Been in the game since the 70s here. Finally broke out here in the mid 2015s. Popped up, retested the breakouts, and potential to go higher here. Quite honestly.
I bought a nice little basket of it today.
We could be finding some resistance up here at the 100 to 120 area.
I'll be good with that.
But long term, if you look at this big correction it did back here, which that's the lowest low, so it makes it difficult to project. I guess I should just do the standard way to project it here. Off of here. Sets it up if we continue the pattern that we have, which right now that's a move up, a retrace, a move up, a retrace, and a potential move up. Put it somewhere around 584 right now.
Dog, I'm liking it.
But that could, look at how long it took to get from here to here, though. So
Yeah.
we're talking about that could be another,
If
it could be out in the 2030s.
If it doesn't get going, I'll get off it, but I'm liking it where it is here, and I bought it. I'm long, I'm just saying.
And that's a climb speed. Consider the climb speed and how far, how long it would take. We're looking at 2030, late 2030s to be up in that area. So I don't want to get anybody too excited about this. Could go from 80 up to 500, 580, but it may take, the next 15 years to get there.
All right, how about MTRN?
MTRN. Let's see. Let's zoom out, take a look what we get.
Passed on this one.
That's a little lofty right now.
Why?
TRN, what we got? Electronics equipment, instruments.
Special space stuff.
There's the high, there's the low. Yeah, we're coming up into that 197 resistance. And that right there indicates we may take a trip back down in here.
Yeah.
Pretty swiftly. And that could be, think about that. It's at 182 and we could come back to 65.
Yeah.
That's
it's too lofty.
It's like a 60% retrace there. Ouch.
And then we might have looked at this one. I'm long. This is MP.
MP Materials. That did a big correction here. And yeah, when all the Trump stuff and the hype and everything, I was warning people this was probably going to pull back. And guess what? We did. We pulled back. Now, that's one of my patterns right there, right? Here's the high. Here's the low. Funny enough, this fib line was not at this high until we made this low. And that happened several months later. Now that is a significant resistance point at 73 right there. Once we get above 73, 75% likely for 112. And if you're sitting here going, how did you learn to do all this chart analysis, stuff like that? I worked at it for a long time, a lot of years. And the only reason, Jack, you're asking me is because more often than not, I get this right than get it wrong.
Amen, brother. That's why I always want to, most of the time, unless it's a Homer Simpson trend that even I prefer to get your view. A highly opinion is priceless to me. Not that I'm not to do it. What you say, I still do what I want to do, but I like to open think,
Yeah, I mean, Hood,
that's warned me a billion times. And what did I do? I just still did my trade.
Still did your trade, and you came out just fine. But maybe possibly in the back of your mind, you went just a touch lighter than you would have otherwise, with the knowledge that we might come back down here, which we absolutely did.
And I got to tell you, I was shocked when it hit 68. Did it hit 68? Yeah.
Yeah. Yeah, we dipped all the way into 64, I think.
I'm stunned because, it was at, I remember it hit 142. That seemed like yesterday. So to see it at 168, that I was like, you know, and a lot of people were saying in this chat, everybody in your company, I don't know who they're referring to. I guess Graham and Nate and other people love Hood, but it keeps going down. And that was when it was at 68. Now it's at 90. I don't know if everybody in our company still likes it. I do.
I was, I didn't just start trading it until we got right here. And then I started selling puts. And I actually, with this pop last week, I actually took a step back. I stopped on a couple accounts, went ahead and booked profit, got it in my PXO, logged in. I made several $100s per contract. In fact, let me see if I can find it in the log. One, I think I have a couple shares that are going to get called out, and I'm not sad about it. Yeah, let's see. Here's one of the positions right here. Look at the premium, $1,000.
Mm.
Never took shares. Right there, $1,000.
Study.
Isn't that crazy? Just doing one contract. People say, "Oh, you can't do one contract to make any money." Are you kidding me?
Awesome.
And
That's
look
like,
at that. I was doing a 74. From February 20th, 74, 74, 74, 74, 74, making $1,000 on 7,500 bucks.
never touch the stock. How do you
And
make a goal without ever buying a stock? That's a great question. That's the answer right there.
I never bought anything. Unless you count, buying the contract back to roll it, but I never
Oh,
bought anything.
I don't count that.
And
It's an out trade.
I never owned anything. All I did was own a promise. I guess you could say I owned a promise to buy the shares if somebody wanted me to buy them at 74.
And you did this exact same thing with TSLL a billion times.
Yep,
Like
I
four,
did.
3.5 without ever buying one share of TSLL. That's a case study. That's going in your book.
And right in here
Write your book
somewhere,
in your time off.
all my time off that you're going to make me take.
Yeah.
Uh,
I'm calling the grill master as soon as we're done here and making her force you to take a week off.
let's see. Here it is. This one. This is the other one right here.
Only because I'm worried about you. You're not gonna be as fresh if you do this for years without a break.
Yeah, I've been doing it for 5 years. Come on now.
You're taking a break.
Here's 420 right here. What a good day, right? 420. Sold the 69s. Sold the 69s. Rolled up to 76 for $2, and then closed them out 3 days later for 12 cents. And
Now,
then called it.
would you go back in at this price?
I called that one quits.
I'm in. I sold the 82s today.
But that particular trade, I called it quits. Like I rolled it and rolled it, 420
I
bucks.
think this thing's going to 140. Why would you quit?
Well, I expected a pullback. Like things don't just go straight up all the time.
I don't let a pullback phase me though. I like a little pullback. I like to get a little long.
Yeah, see, you like to add to it when it pulls back, but that was all my risk on that one. So I gotta let it pull back before I add more risk. It's just the way I roll at it.
Yeah.
I do
Uh,
pretty good. I mean, this one's in an IRA
Mine
right
doesn't look
there.
like it. When I wrestle around with them. I get put, I get called out, I get put, I get called out. Mine doesn't look nearly as clean as yours. Most of the stocks, yeah, I take possession and my assignments and expirations are big.
I just hit it, hit it, hit it, hit it, hit it, hit it, and then quit
Swing.
it.
All you're doing really, if you think about it, you're just using your capital to make cash flow off your capital and using the stock as an asset to create that cash flow. I love it. No stock ownership, just pure cash flow.
And we consider this right here, 1,026 bucks, right? Divided by the cash I'm using, 7,500 bucks. It's 13.6% return. Now the days, let's see, that's 1 month, 2 months as of today. So 60 days. Could go 61, whatever. March had 31 days. Divided by 61 times 365. That's an 81%, almost 82% annualized rate of return right there.
Tim brings up a good point. He says, my fishing is probably like your backroom bot geeking. Different strokes, different folks. So you do take time off to play around.
Yeah. I mean, it just depends on how you, I have 1 day off a week, which is my Saturday, which is usually why I don't like to do sales presentations on Saturdays.
Yeah.
My one
So
day
you're
off.
81% here, just using your cash to create cash.
Yeah. 81% annualized rate of return. Think about that.
Believable. And that's twice what we need.
Yeah. Why was I
Love
hitting hood? Because it was paying out like
I
a
love,
beast.
love it. Speaking of beasts, what do we got teed up here?
That's a good question.
That's a good question. Actually, Jeffrey, I was gonna ask you, going live today?
I have no idea. Nobody said anything to me.
I know, I was trying to figure it out myself. Because on my document it says live, but then there's also a link in there for, so and then Jono gave you a deck. So I was like,
And
I'm
Joni gave
getting
me a deck.
conflicting. Yeah, I'm getting conflicting information here.
I was not knowing about going live. I guess
That's
I could read the deck if
I
that.
mean, it's up to you, brother.
If you got a stream link, that works for me because I got stuff I
do.
need to.
That's
I got
fine.
stuff to go do.
Yeah, that's fine. I have a stream link for you, and it's the Cash Bot, by the way. So if you want to give that a quick little
Oh yeah,
intro.
Cashbot. So there's day trading, which hopefully soon that won't matter anymore. But right now, you got to have $25,000 to day trade, right? And a lot of people, if that's on a margin account, I know there's cash accounts you can do, and in fact, I do encourage people to use a cash account to trade in for day trading because then you don't get hit with pattern day trader. But in my effort to try to alleviate some of the pattern day trade requirement, I came up with Cashbot. It's a trade that lasts 2 days. It's basically taking advantage of the same thing that my triple threat trader trade takes advantage of, but it does it on just slightly slower time frame, gives it a little more time to work out. About the same win rate, roughly 80% on long term, but that does, lead to significant risk of loss. So the average, comes out about a 4% average return, winners and losers combined over hundreds of trades, and it's all automated. They're credit spread trades.
Yes,
So
sir.
if it reduces the capital requirement over just buying calls, and we try to edge up the system with a high probability price pattern that's automatically found in the market. And I like it. It only runs on the 3 indexes, QQQ, SPY, and IWM. They all have daily options, and this takes advantage of the options that are the next day because they're all overnight holds. At least that's the intention.
Mm-hmm.
And 50% gain is what we're going for every time. We're not going for the whole credit. We're just going for 50%. I, kind of learned that from Jack a little bit, just to go for half the credit and get the heck out of Dodge. It works out well. Ups the win rate a little bit. So this presentation will show you how it all works.
That's right.
Cool.
And I will pull that up right now.